Joining us to break down Nvidia earnings is Angelo Zino, Senior Vice President, Technology Equity Analyst at CFRA. Angelo, thanks so much for joining us.
Great, thanks for having me, Carolyn.
So Angelo, Nvidia crushed earnings expectations on sales that rose more than 70%. Guidance was upbeat and the stock is lower right now, down more than 3%. What is going on here?
Yeah, I mean, it's always difficult when it comes to the chip space and when you start thinking about needing to be contrary in nature. But, you kind of look at the numbers here. I think some investors out there might think that this might be too good of a print. And to your point, I mean, the company really hit on all cylinders here. They beat significantly as far as the quarter is concerned. They did guide better than expected, by a wide margin. Not to mention on top of that, this is a name that did run into the print here over the last couple of days. We did have Q4 earnings season from the hyperscalers, right? Essentially all of them gave CapEx guidance that was higher than expected across the board. It really started with Meta and then Alphabet when they really bumped up their CapEx to the level that they did. You knew Amazon was going to do it, and while Microsoft necessarily hasn't committed to that here for calendar 26, they're bumping up their CapEx as well dramatically from what they previously anticipated. So I think as far as the print is concerned, it was a great number, but I don't think it necessarily surprised anyone, and because of that, you're getting the lackluster reaction here in shares. And not to mention, when you look at Nvidia over the last couple of quarters, it's almost kind of been a lackluster type response.
Okay, so you rated Nvidia a strong buy going into the print. Given the fact that it's selling off, I'm assuming you would say this is a buying opportunity here, but the biggest reason you'd still be a buyer after?
Yeah, no, I think that's a great question. So I think when you look if you're a long-term investor at this point in time, and you are a believer of this kind of shift to greater AI workloads, what I think Jensen Huang did a really good job of on the call was really sell. I think compute demand is more of this less capital intensive and more consumable driven to some extent, whereas it's essentially going to be driven with the need for more and more tokens, and as data continues to explode out there. So when I start thinking about just Nvidia and the long-term trajectory here, I don't necessarily see them as a chip company. I see them as kind of as this infrastructure platform, and you're going to continue to need to leverage this platform here in the foreseeable future, because token growth is going to explode not only over the next 1 to 3 years, but over the next decade. And as a result, I think that Nvidia ecosystem continues to get stronger over time, despite some of the near-term concerns out there, whether it be bottlenecks tied to memory or the power needs out there, or whether it be tied to uncertainties about the actual end demand landscape in any given quarter.
Well, as we think about competition, at least on the chip side, is AMD closing the gap? Does Nvidia still have the lead that it used to?
So Nvidia still has the lead, but I think AMD's got a great opportunity here. I mean, they did just announce a partnership with Meta. That was a great partnership in terms of the 6 gigawatts. I think that really paves the way for them to really start ramping up these rack scale solutions that they plan to ramp up in the second half of this year, and it's going to gain momentum here into 27 and beyond. When I think about the tail opportunity for between AMD and Nvidia, I'd say the greater upside is going to come from AMD. So that's a name where I think over the next 3 to 5 years, you've got some significant upside potential, because they're now just starting this journey into these large-scale solutions. And we do think they're going to be successful there. And essentially, they're coming from a market share of near zero. So the upside there is absolutely enormous in our view. And again, they'll take some share from Nvidia, and we think that's perfectly okay, because the bigger story for Nvidia is going to actually be the content growth in data centers. So not only are they going to continue to see growth in their GPUs, but CPUs are now becoming a much bigger opportunity. What they're doing on the networking side is just absolutely incredible when you start looking at the growth rates there. So the content growth that they're seeing across their entire platform, we think will continue to allow them to grow as well.
Okay, so if Nvidia is a strong buy, is AMD a stronger buy then?
I mean, if it could be a stronger buy, it would be. But I'll be honest with you, they're both strong buy recommendations, and it really is pegged on the bigger thesis out there in terms of the demand, the need for significantly more compute here over the next couple of years or so. So that's really the core of the thesis, and both of those names really are going to be beneficiaries. I'd say if you're willing to take on a little bit more risk, AMD is probably the better play for you with the more upside potential. If you're a little bit more risk averse, looking at a name that maybe won't run as much, but at the same time maybe has less downside potential, I'd say Nvidia is your better bet of the two.
Okay, I know at least going into the print, Salesforce was also a strong buy. That's a name that is getting some buying after earnings. Shares are up 3%, but down, 25% year to date.
Yeah.
What's your take about that report, and what's your view on Salesforce now?
Yeah, I mean, so that's probably one of our favorite SaaS-oriented names. We really only have two strong buys in the SaaS, or two pure play SaaS names as strong buys, and that is Salesforce and ServiceNow. And Microsoft is the other name, but it's not a pure play SaaS name. But you kind of look at Salesforce here, the results. I'd say overall it's as good as you could have expected, except for the fact that they guided a tad light on the revenue side for the upcoming year. But when you kind of think about everything that they pointed to, really the driver for the future for them is going to be that Agentforce platform, the ability to potentially shift to more agentic AI capabilities. And they've seen some really strong momentum on that side. They are continuing to basically throw out the narrative that they can accelerate their growth in the second half of this year. They don't need to do that because this is a stock that's only trading about 13, 14 times next year's earnings. So we think the bar is extremely low here for Salesforce. We would absolutely be buyers at these valuations. And if they somehow can accelerate in the second half of the year, which nobody is forecasting at this point, then all of a sudden you have the potential for the stock to re-rate.
Okay, so you said you have two strong buys in terms of SaaS companies, not very many. How much of that has to do with the fact that AI could disrupt the whole industry?
I mean, it has a lot to do with it. I mean, there's absolutely a lot more uncertainties in this type of environment. When you kind of move, when you see technology, massive technology disruptive trends like you are seeing right now, there's a lot of uncertainties in the market, but I also think that does create opportunities. So when you kind of look at the SaaS space, the overall software space, I mean, the space has been decimated in nature, and that's because investors at this point in time really don't know who are going to be the winners or losers. We do believe that there are going to be winners there, and given that, you should be looking to find ways to at least be exposed in this space. You may not be right. But I think this is an opportunity for many out there to at least, potentially look at some sort of contrarian trend, even if it's over on a 3 to 6 month, basis at this point in time.
I'm curious, as a tech analyst, does the rotation that we've been seeing out of technology make you question your bullishness on overall tech and really the AI narrative?
Caroline, I think, well, one, it doesn't. And yeah, I will say this, when you look at tech overall, the health of tech isn't as bad as it seems on the surface, right? And the biggest reason for that is it's just a lot of large cap names at this point in time that have kind of been, let's say, compressing their multiples, digesting some of the gains that they've seen over the last 3 years. And we know what names those are. And clearly, they're the Mag 7 type names primarily, as well as the disruption we've seen on the software side. But if you actually look, let's call it at the S&P 400, so your mid-cap tech names, and the S&P 600, so your smaller cap tech names, those names are actually up on a double-digit basis on this year. So we're actually seeing some very healthy gains and promising moves on some of the smaller mid-cap tech names. So some good action that's out there. And semis still look pretty good this year, but overall there's a lot of noise that's going on the AI side of things within tech. And I think some digestion, some uncertainty to be thrown out there is probably a healthy thing for the long-term health of this market.
I want to name a stock. You're going to give me a one-word rating, buy, hold, or sell, and the 10-second why. You ready?
Yes.
Salesforce.
Say buy. Biggest reason, it's a great contrarian name, trading at only about 13, 14 times, where we actually think the long-term picture here is sustainable.
AMD.
Buy. Early innings here for them with a long-term tail trajectory where we see significant upside, potentially doubling, tripling their revenue here over the next 5 to 6 years.
A name we haven't hit on yet, Broadcom.
Broadcom is a buy, but we're a bit skeptical of it. But that said, we do like the narrative here, the shift towards custom silicon, them being the biggest provider out there. Not to mention the CapEx boost that we've seen. We expect very good results from them.
Micron.
Micron is, continue to like the name. It's a buy. What we would say is be a bit cautious on it because of the move that it has had. And at some point, memory is probably the first area of this uptrend that you want to be out of. You want to be out of it earlier than anybody else. But that said, we still like the name.
Intel.
Intel is we would avoid it right now. The valuation just doesn't make sense to us. We don't really necessarily see the pickup that maybe some others are looking for, probably until 2028, where we start seeing that earnings trajectory potentially playing out. But at this point, the time horizon is just too long for us.
Oracle.
On the sidelines, we would avoid the name. And we just think there are better ways to play the AI infrastructure trade right now, and they're likely going to need to tap the markets again for additional capital here over the next 6 to 8 quarters.
Qualcomm.
We like it. This is more of a longer tail, but the valuation is so enticing to us. If you're a patient investor out there, this is a name that we think has some nice upside to potential, especially as AI moves to the device side of things. But that said, they're going to feel some uncertainties here over the next 6 to 9 months.
And finally, Apple.
Love the Apple story. And you kind of look into the second half of the year. I think this is finally the year they get the AI story right. They're going to get AI into the hands of the consumer. That's going to really help with the iPhone 18 cycle later this fall. Not to mention, we do expect them to get into foldables. That's going to provide some upside, we think, and greater adoption for a number of consumers. So overall, we do like the story here for Apple a lot.